One of the most confusing parts about Chapter 7 bankruptcy is what to do about your car, and specifically reaffirmation agreements. Before the bankruptcy laws changed in 2005, the advice that a knowledgeable bankruptcy attorney would typically give you would be that, okay, you have a car, you have a contract on the car, just keep the vehicle if you want and keep making the payments. The advantage of that is you are receiving a discharge of the obligation of bankruptcy even if you keep the car. And what that means is that if 6 months or a year or even 2 or 3 years down the line you can't make the payments and the vehicle is repossessed, the car company or financing company can never come after you for any sort of deficiency. So in other words, if you owe $10,000 on a vehicle and it's worth $3,000 and that's what it's auctioned off for, they can't come after you for the other $7,000 because you have received a discharge of the obligation. Again, even if you've kept the vehicle. That's called the pay and ride option. The 2005 revisions to the Bankruptcy Code did away with that as an official option. As of 2005, you have several different options on what you want to do with your vehicle. You can surrender it, you can redeem it, meaning you can pay in a lump sum what the current value is on the car, or you can do a reaffirmation agreement. A reaffirmation agreement means that you are reaffirming your obligation to the lender. So for instance, if you still owe Toyota Motor Credit that $10,000 on your car, signing a reaffirmation agreement says that you agree to once again be personally liable for that $10,000 loan. Now typically the interest rate doesn't change, the payment doesn't change, the term doesn't change, everything stays the same. The problem is that you are once again binding yourself personally that contract. And again, if somewhere down the road you're not able to make the payments or the car falls apart and you want to simply return it, the problem is they're going to auction it off for next to nothing and come after you for that deficiency. What happens if you refuse to sign a reaffirmation agreement? Technically, the car company can demand that the vehicle be returned. In practice, there are very few lenders that actually force you to sign a reaffirmation agreement or surrender the vehicle. The two largest in Virginia would be Ford Motor Credit and SunTrust. If a client of mine has a car loan and it is not with Ford Motor Credit or SunTrust, I strongly recommend that they do not reaffirm and that they simply do what I recommended they do before 2005, which is keep the vehicle and keep making the payments, but don't reaffirm. I haven't done a reaffirmation agreement for a client in over a year, and I've never had a vehicle picked up in the past 8 years that a client wanted to keep for refusing to do a reaffirmation. So when I have clients come into the office, I have a sheet specifically on reaffirmation agreements so they can read through it a number of times. Reaffirmation agreements, again, are the most confusing part about bankruptcy, but I'm happy to explain it and all the other options that you have.